It is Friday, May 3rd. So taking a look at the QQQ, we closed just under this 50-day moving average. We gapped up here from yesterday on Thursday. We had non-farm payrolls that came out today. It was a little bit lighter than expected. This is good for the Fed, I guess. The Fed wants to cool off the economy. The FOMC meeting on Wednesday, Jerome Powell talked. He said he doesn't see stagflation affecting the economy and that uh, he likes the direction that the economy's headed. They're going to leave rates unchanged. They want to see the economy cool off a little bit better, and they also want to see the employment sector cool off. So these non-farm payrolls coming in a little lighter than expected was considered good news, and you can see this gap up here. In addition to that, we also had Apple's earnings yesterday, which were good, beat expectations. Apple itself also gapped up. So my takeaway from this is the market is trying to run higher. We made this new high here above this kind of short-term high here in the decline. So we came here, we made a new high, gapped above that. Next question is, can we get above this 50-day moving average? If we can get above and hold above this 50-day moving average, very bullish sign for the market. And in my opinion, the market will be turning bullish if we can get above and hold above that 50-day moving average. Taking a look at the SPY, similar setup, just underneath this 50-day moving average. It did try to breach it today, wasn't able to hold that though, so we closed just under it. Same thing, gap up here as well. We've got the price of gold right here. Gold's been on an absolute tear, just recently broke out to a new all-time high. That momentum is coming out of gold below a declining 10-day moving average and also below a declining 20-day moving average, but holding above its 50-day. Gold is looking pretty good. Cannot say the same for the gold miners. We'll flip over here to copper. So with the price of, or essentially with EV demand, the electrification of the U.S. grid, data center demand, you need copper for all this stuff. So the price of copper is not going to lie. As you can see here, we're approaching all-time highs of $5.03, approaching those all-time highs. I'm keeping a close eye on this. I'd rather be in the middle itself rather than the miners. The miners aren't looking that attractive to me. On top of that, the miners are saying that they need higher prices to justify opening up a new mine, to get funding to open new mines. And once you start the new mine, it takes about 10 years to actually get ore out of the mine. So this is a slow process. This isn't going to be anything that's going to happen anytime soon, but there is basically like a shortage on copper mining. So the price of copper should continue to rise. Next up, we've got Bitcoin. So Bitcoin momentum's come out of this as well, sitting below its 10-day, declining 10-day, 20-day moving averages, and under a rising 50-day moving average. So the momentum has come out of that. If we look at Ethereum, very similar setup here as well. Sitting here below a declining 10-day and 50-day, or excuse me, it's just above its 10-day moving average, but sitting below a declining 20-day moving average and sitting just under this 50-day by a good margin and just above that 100-day moving average. Next thing that we're going to take a look at is we're just going to sit here and run through some of these earning beaters. I will talk about very briefly right here this 10-year treasury yield. So I'm going to blow up this weekly chart and we're going to zoom out here on the 10-year treasury yield. Right now, our high that we made was about right here, just right here at 5%. So the calculus is as these yields go higher, it changes the calculus for people running money, these hedge fund managers and money managers, pension managers, etc. It changes the calculus for them because they can get a risk-free rate of return from the treasury at 5% versus what you're getting in the stock market that's not guaranteed and you are taking more risk. So as these rates go higher, it changes the calculus on do I want to be in stocks or do I want to be in more bonds? We will see if this continues to edge higher, but recently we got a recent downtick here for this week. And now let's run through earnings. So I talk about this all the time, basically, how I divide up and look at the stocks and really narrow in on exactly what I'm homing in on. So if you go to the Investors Business Daily site, investors.com, you see stock lists here, click their IBD data tables. You don't actually have to be a paying member to use this. You might get the paywall link that comes up. Just click around that and you should be able to pull up the Smart NYSE and NASDAQ data table. So from here, what I do is I copy in all of these symbols and it shows you, the top performing sectors. It shows you their percent change since the beginning of the year. So I'll come in here, copy all of this into a spreadsheet. The last time I did this was in March. So all of these are copied in the spreadsheet. Once I have them copied in the spreadsheet, I can go ahead and filter out you know, exactly what I want to look at. So I'll filter by conditions. Usually I'll set it by a value greater than 79. So I'm looking for like 80s and above here. And this will really help me dial in the absolute best stocks, the best stocks out there. So if, you know, we come and take a look at this, these different like composite rating, EPS rating, it's got the definition down here. Your EPS, it's comparing, you know, stocks last 2 quarters and its 3-year EPS growth to all the stocks in the market. You know, relative strength, it's comparing just basically the relative strength in the last 12 months to all the stocks in the market. You've got your sales profit ROE, that's the SMR rating. And this is just basically giving you a profitability, like a profitability overview. You want A and B here, accumulation, distribution. These are funds. You know, institutions, are they accumulating the stock or are they selling the stock? So I'll sit here, run my filters, and then, you know, once I get done running my filters and I look through these stocks, typically once I run the filter, it's like 200 stocks that I look through. I'll come over here to another spreadsheet, copy over, you know, the elite of really, you know, what I want to narrow in on. And on this elite growth stock, I also added a earnings tab. So you can sit here, follow all of the earnings. The way I have this earnings sorted right now is by the post earnings percent price move. You can see it's got the reported revenue versus the estimate, earnings reported versus the estimate or expected, and then the guidance, whether they raised it, whether it was in line, below consensus, lowered it, et cetera, et cetera. So what we're looking for is a triple beat. We want them to beat on revenue, we want them to beat on earnings, and we want them to raise guidance. That's what we're looking for. So the next thing that we're going to take a look at is we're going to just dive into these earning beaters. So all of these companies here that we're about to look at, these have beat on their earnings and they have gone up in price as well. So first up, we've got Garmin. Not quite at all-time highs, but this is, as you can see, a market leader. Not something I would want to buy in right now just because it's outside of this Bollinger Band. So if we can come back down within that Bollinger Band, this is something that I would look at. But you can see here we got a massive gap up, and then on the open, it just, you know, ran for the last. This looks like what, the last 3 days, I want to say. Yeah, so for the last 3 days, this is just basically just ran and ran and ran. Next up, we've got Sprouts Farmers Market. Sprouts Farmers Market as well. They had a gap up 2 days ago, and it's just, you know, been higher and higher. Great stock. This is a market leader. Great strength in this. Did not sell off at the broader market. We've got Train Technologies. This is the air conditioning stock. This is related to the AI data center play. These AI data centers produce way more heat than a normal data center. This is a stock that I like very much. Beat on earnings, gapped up. One of the market leaders here. Here we've got Amphenol. I bought them after their earnings came out. They do the networking interconnects, so like fiber optic interconnects, et cetera, et cetera. Basically, inside of these AI data centers, if you have 40,000 GPUs, they have to be linked together with networking equipment. This is another AI data center play. I like them a lot. Component manufacturer. As you can see here, market leader. Great stuff right here. You want to be in the leaders. Apple just came out with their earnings. I'm actually going to come over here to this weekly chart so we can see this a little bit better. Going to blow this up for you. As you can see here, Apple since 2020 has been grinding slightly higher, but also range bound. So we keep getting in these sideways ranges here. No difference here. You know, Apple on the street, all the analysts are clamoring for what's their AI strategy, blah, blah, blah. One, they're very well positioned to do on-device AI computing. Their semiconductor team is extremely strong. They make extremely powerful chips that are very good on the amount of energy that they use. So they have a great internal semiconductor design team. It really comes down to the question of the software. Are they going to develop an LLM and other generative AI in-house, or are they going to, you know, license Google or somebody else to do that? There's talks they wanted to use Gemini. We'll see. They're not in a rush. They don't need to be first to market with this stuff. You know, Apple's really concerned about getting it right more than they are being, you know, first mover in the space. So I'm not worried about Apple here. It is a little sideways though, and it has been sideways for some time. So, you know, if it's not working for you and it's not going up, like this is moving sideways. It's not really the market leader. But, you know, if we could break out to a new all-time high here above this 199 level, you know, maybe get some momentum behind it. Next up, actually, well, so I guess we'll pivot out of earnings here, and we will go into the India Wisdom Tree ETF. So this is tracking the essentially Indian stock market, just pushing all-time highs here. You can see it looks a lot better than the US market. The US market's sitting below its 50-day. This is well above that, pushing all-time highs. And the next one, since we're on foreign markets, I will also pull up Japan. Japan's sitting better than us, moving a little bit sideways here, but still sitting well above its 50-day moving average. Can't say the same for the US markets. All right, so jumping back over to earnings here. Next up, we've got Omcor Group. Omcor Group is an industrial player. They specialize in basically electrical connections inside buildings. So power transmission, distribution, generation systems. If you're building a data center, this is where you're going to be using to hook up to the grid too. Great stock. Reported earnings, once they report it, gapped up, and we're off to the races there on Omcor. Qualcomm, this is going to be a wireless player, but they also produce chips in-house, similar to what Apple does on their ARM chips. They produce those for cell phones. They're moving into the laptop and desktop space. They've got strong IP. Another one of the semiconductors. Love this stock. Nothing wrong with it. Gapped up here on earnings. They gapped up, leading the market right now, well above its 50-day moving average. Another one of the good stocks that I'm looking at here. We've got Google. Google, they reported earnings, gapped up here, sold back down because this is a very large gap, kind of sold back down into the gap a little bit. We're holding above this 2-day and 5-day moving average here. I like Google. They're one of the hyperscalers. They're investing a lot of money in their AI infrastructure. Nothing bad to say about them. Veritiv, this is another company that helps to set up the life cycle services for data centers, communication networks, and other kind of related industries to that. So if you're building a data center, you're probably going to be using Veritiv to help build, set up, and manage that data center. This is one of the ones that I bought post earnings. Came out here, gapped up here. We've been holding very well, market leader. Now we've got POWL. This is going to be another industrial electrical component supplier. Once again, came out with earnings, gapped up. We sold back down in the gap right here, but still a market leader, holding above its 50-day moving average. Another stock that I like. Next, we've got the POWL Group. POWL Group, they're one of the home builders. Home builders has been one of the sectors that's been on fire. It's been industrials, semiconductors, business services, communications, industrials. So like I said, this is in one of the sectors that's just on an absolute fire. Came out with their earnings, and we've been up and away ever since. Now we've got Monolithic Power. Monolithic Power, they are another AI data center play. The electricity that goes into the data center, that goes into the server rack, they are making the chips that step down that voltage. So let's say the voltage is coming in at, let's say 48 volts DC. They're stepping down that voltage so it can actually be used by the GPUs, and they step it down to, let's say, 5 volts, and then down to 1 volt so the actual chip can use it. Can't make chips, can't make AI data centers without these voltage transformer chips that Monolithic Power produces. We've got Amazon here, another one of the hyperscalers. Their Amazon Web Services is absolutely crushing it on all cylinders. Their retail side is doing well, is also doing well. As you can see here, reported earnings, and we are above where they were when they reported back here on this date. So this is another stock here. It's pushing all-time highs. If we can get out to a new all-time high, hopefully it can get some momentum behind it and start running. TradeWeb, this is a advertisement online marketplace. They reported their earnings here. After they reported, we are higher than when they reported. So this is another one of the market leaders right here. And as you can see, very close to these all-time highs. Also holding just above its 50-day moving average. We've got Fix. This is Comfort Systems, another air conditioner stock. I love the air conditioner kind of area of the market. Has to do with cooling off these data centers. Reported earnings back here, and we are above where we closed just before they reported earnings, sitting just above this 50-day moving average. Once again, another market leader. Eaton, this is absolutely one of my favorite plays right now, unless one of the largest electrical industrial component suppliers. If you need a EV charger, an AI data center, you want to add heat pumps to your building, you're going to need their transformers and their electrical industrial components to be able to hook up to the grid and do what you need to do. They recently came out with their earnings. I believe that they're a little bit lower than when they reported, but they did beat, and this is something that I'm following closely. This is one of the better plays in the AI data center thing outside of chips. Let's see, we've got Weatherford International coming up here. This is a oil and services group. So if you're out there fracking for oil, let's say in the Permian or the Eagle Ford Shale or any of these different shale plays, you're going to be using Weatherford Services to help you mine that oil and gas. This is like one of the only energy stocks that I actually like. There's not a lot in the sector that I like. Next up, we've got American Express. American Express, we all know what they do. They do credit cards. They came out with their earnings not too long ago, broke out to a new all-time high. Recently we just sold under that high, but we're sitting very well here, just under this 10-day moving average, sitting above the 20, sitting above the rising 50-day. We've got Intuitive Surgical. They make the Da Vinci surgical robot system. This is a less invasive version of surgery for certain surgeries. It allows the patient to heal quicker. It's less invasive. The doctor just got more precision. Really cool stuff. Check them out on YouTube. Type in the Da Vinci robot. You can see how it works. Really cool thing. The stock's been around for a while. They just keep coming out with new robots that are better and better. Here we've got Celestica. Basically, they're in the supply chain. So they do infrastructure, IoT, things like that to help manage the supply chain. Came out with their earnings, and they are higher than when they reported right here. So just another market leader to keep an eye on. MedPace, they do they conduct clinical trials for these drug companies. So if you're a drug company and you're out here and you're producing the next whatever the drug is, when you run your clinical trial, you're probably going to do it through them. They'll provide this facility, they collect the data for you, they submit it to the FDA, et cetera, et cetera. Basically, this is the picks and shovels play on the biotech sector. Those biotech stocks are very volatile. If you fail your phase 1, 2, or 3 clinical trial, your stock can easily be down 40, 50% overnight on a gap down. A lot of risk there. I like this just because, during the gold rush, the gold miners, most of them didn't get rich, but the person selling the picks and the shovels to the gold miners, they did get rich. So picks and shovels play. Next up, we've got, I believe this is DR Horton, another one of the home builders, recently came out with their earnings, and we are above, kind of where the stock was just before reporting. We are above that. They're building homes across the U.S. After the 2008 financial collapse, they stopped building homes. So there's a shortage of new homes in the country that we need. Next up, we've got Microsoft, another one of the hyperscalers. Their business is executing on all cylinders right now. They're doing a great job. Came out with their earnings. We're higher than when they reported, but we are still below a declining 20-day moving average and below a declining 50-day moving average here. Next up, we have Apollo Group. This is a private equity firm, one of the only financials that I really like. Came out with their earnings, pushed up here, but we're still below this 50-day and below this 20-day moving average here. And then we've got Eli Lilly. Eli Lilly came out with their earnings, beat, but they have sold off a little bit since. And that's about it. That's about all I got for you.